Hello traders, welcome to episode 14 of our top-down analysis series. I drop trading setups every Sunday on this channel and I trade the SMC strategy. And if you want to learn the strategy, it's readily available on my channel. Go through the course and then you'll be able to join me on my top-down analysis series. So we are beginning with VIX 100. We are beginning our analysis with VIX 100, and then we are beginning from the weekly time frame. From the weekly time frame, we just want to determine our bias. As you can see, price is bearish as we are forming lower lows and lower highs. So our bias is bullish, is bearish on VIX 100, and we'll be looking for selling opportunities. And then if we go to the daily time frame, from the daily time frame, we can be able to see that this is the recent break of structure. That is the recent break of structure to the downside. So we have a break of structure there. So we have a break of structure. And then the other block which caused that break of structure, the other block which caused the break of structure from the daily time frame, it is that one. So we are going to wait for a retracement into that other block and then we'll join the trend as we are pushing down. So that is our order block from the daily time frame. So that is pretty much it from the daily time frame. If you go to the 4 hours, if we go to the 4 hours, we can be able to adjust our order block in the break of structure. So from the 4 hours, that is the most recent break of structure. So that is the most recent break of structure. And then the other block which caused that break of structure is that one. It's that one from the 4 hours time frame. Therefore, we're just waiting for a retracement into that order block. And I can also see this break of structure that price is forming here. So we are not gonna mark that break of structure as our point of interest because I'm seeing that as liquidity that price will sweep to go and tap into that order block. So that is all from the 4 hours. And then if we go to the 1 hour, 1 hour, which is our entry time frame, from the 1 hour, that is the order block. From the 1 hour, that is the order block. And we'll be waiting for a retracement of price into that order block. And then we'll continue selling as our bias is bearish. As our bias is bearish. So that is what we have. So we have a break of structure, and then we have an unmitigated order block. And I'm seeing this break of structures that price is forming here as the liquidity that price will sweep to go and tap us into that order block there. And then also let me mark the FVG because price can decide to react from the fair value gap, but most of the time it reacts from the order block. So I just like to mark the FVG as well, because if price is not reacting from the order block, then it's reacting from the FVG, which is the fair value gap, fair value gap. So this is the liquidity, the trend line liquidity that I'm seeing here, that price will sweep to go and tap us into that order block there. So all our confluences are intact. We have a recent break of structure. Our order block is present and mitigated, and then we have a FVG. So we are just waiting for a retracement of price to go and mitigate, that order block, and then we can join the trend and continue selling as the bias is bearish. And if you want to get into this trade, I'm gonna give out a sell limit with our stop loss slightly above the order block, and then our entry price at the order block, because I know VIX 100 likes to react at the order block, and then our take profit is going to be at that low there. Our take profit is going to be at that low. So if you want to enter this trade, you can set a sell limit with your stop loss at 610.57, and then your entry price at 585.38, and your take profit at 517.53. So that is it. That is all for VIX 100. That is setup I'll be waiting for this week. All our confluences are intact, break of structure present, liquidity present, our FVG is there, order block is there. So that is it. And then if we go to volatility 100, 1S from the weekly time frame, we can start by marking our supply and the demand zones. So we have a supply there. So we have a supply, and then we also have a supply here. And then we have down here, we have our demand zone. So this is the demand zone that we'll be targeting. And from the weekly time frame, I can see the buyers price is moving from the supply headed to the demand zone. Therefore, I'm going to be looking for selling opportunities to the downside until this demand zone. So my bias for this week on VIX 100 1S is gonna be bearish, and we'll be looking for selling opportunities to the downside. From the daily time frame, let us study the recent price action. So we have a break of structure. That is the most recent break of structure to the downside. So we have a break of structure. And then the order block, which caused that break of structure, it's that one where price is currently reacting. So that's the order block where price is currently reacting from the daily time frame. And then if we go to the 4 hours time frame, from the 4 hours, that is the order block where price has reacted and it's pushing down. So that is our break of structure. So that is our break of structure. And our take profit is going to be at this point of reversal. So price has reacted and it's pushing down. It's not yet here there at the take profit point. It's still going back at that order block. Let's see if we go to the 1 hour time frame. From the 1 hour, this is what we have. So we have a break of structure, and then our order block is there where price is currently reacting. And price reacted from the order block, but it pushed until this support level. It's not yet at our take profit point. It's at that support. And I'm still waiting for price to give me a reversal at this order block, and then we'll enter, because the overall bias is bearish. Therefore, I'm gonna be waiting for price, because price is looking like it's still going back at that order block. Okay, it looks like price has rejected and we are pushing down, and we are pushing down. So we're just gonna wait for the a reversal candlestick pattern at that order block, and then we'll enter the trade, because our bias is still bearish. We go to the M30. There's nothing much in the M30. We're just going to wait for a reversal candlestick pattern at this order block, and then we'll continue selling. And you're going to wait for a bearish engulfing, or a tweezer top, or the bearish pin bar, or a doji plus any of the reversal candlesticks I mentioned. So that is what I'll be waiting for this week. On VIX 100 1S, I'm expecting for price to give me a reversal and then continue selling. I'll only change my bias once price decides to invalidate my order block. Then I will change my bias, but for as long as price is within my level of interest, I'll still be looking for selling setups. All right, traders, that's it for this episode. If you did get something out of this episode, do give it a thumbs up, drop a comment in the comment section, and consider subscribing to the channel. Happy trading, and see you next week in our episode 15 of our top-down analysis series.